A new survey from Wolfe Research says 41% of investors view the software sector as more attractive going into next year relative to 2021. That bucks a multi-year trend of overvalued sentiment. Joining us now with his best bets and M&A predictions for the cloud is Alex Zukin of Wolfe Research. Alex, start off with me on this survey and what it says to you.
Hey, David. So this survey is really interesting. It was 123 institutional investors. And look, what they're saying is that there's clearly a shift in focus from just growth to margins and efficiency. I think a lot of people are still very interested in the sector. There's a lot of, thoughts about M&A. There's a lot of thoughts about the right themes to be playing, whether that's data, the rise of the future of work, which names, which thoughts and names are played out. So it was we were really thankful to get the kind of participation we were able to receive on this survey.
All right. So what does it sort of say to you, or how does it change your thinking in terms of what you're recommending or not?
Yeah, look, we're still very positive on the sector, but we think things are changing in 2022. We think investors are going from focusing on just growth to really focusing on, are these good businesses? Is there cash flow? Is there efficiency? And so the two things that stood out to us was, look, digital transformation can't happen without trust. And what we're seeing towards the end of the year around security, whether we see the vulnerabilities, whether we see the outages, these names we think are poised for a meaningful comeback. And some of the largest upsides we have in our price targets are actually security names or cybersecurity names. And then on the other side, all of our top picks have really strong cash flow multiples, free cash flow profiles. We think that's such an important focus going forward because it's not just about growth anymore.
One of your top picks is Salesforce. I think you have a high price target on that name and expect it to make another big deal next year. Didn't the market want Salesforce to stop making big deals after Slack for a little while?
Yeah, it's a great point. And we actually said at the end of the year, we think that Salesforce is just super well positioned in this environment. We do think that, the team that they've assembled at the top, starting with Brett Taylor and Mark Benioff, with Amy Weaver as CFO, is just the best one they've seen in years. They're all aligned. We think they've got a lot of great trends, in terms of driving revenue growth. We think that the Slack acquisition is going to really position them well around where the future of work is going. And ultimately, it's a renewed focus on margins. We think they're going to continue to surprise the street positively on putting up better free cash flow, better margins every quarter. But we don't think they're going to stop doing deals, whether it's next year, whether it's 2 years from now. We think the right deals and the right strategy. And we think, similar to what Microsoft, you've seen them focus on with security, we think Salesforce is not going to be far behind. We talk about Okta as a really strategic and transformational acquisition. Would be the largest one they've ever done. That would, again, kind of double down on this notion of trust around identity, around you really can't have a single view of your customers without it. So while it's not necessarily something we think that's going to happen over the next few quarters, we do think that unlocking the margin potential of Salesforce enables them to have a better currency, to drive better confidence from investors, and ultimately continue to make growth accretive acquisitions.
Yeah, I would come back and just point out antitrust is going to continue to be an even bigger obstacle to potential deals. The bigger they get, the more attention they get, regardless of whether they even should draw red flags. But let me end on CrowdStrike, because I notice you're also favorable on the future for that stock. It has been a brutal year, and very recently as well. Why do you like it?
Look, we ran a survey with 69 chief information security officers, and the data was pretty clear. Ransomware is the #1 security concern headed into 2022. EDR, which is what CrowdStrike provides, remains the #1 priority for next year. And CrowdStrike remains as not only the #1 ranked vendor in EDR, but the #1 ranked vendor across 32 of the top public and private players in our survey. We think CrowdStrike's going to show really strong upsides and numbers on top line, and they are a very free cash flow generative company and business. So great team, right where you need to be to solve the pain points of the moment with a great free cash flow story equals a great stock, in our opinion.